Are you struggling to identify where you should buy real estate investment property? Are you looking at markets that you have an interest in or that you can afford to invest in, and you're trying to buy an investment property, but you really don't understand or even know what to look for with regard to the basic fundamentals, elements, and infrastructure that a neighborhood should have to make it a solid investment? Then it's a really good thing you clicked on this video. Once again, welcome back to Confident Real Estate. I'm your host, JC. Today, we're going to achieve and look at exactly those things. We're going to identify what your investment goals are, the types of properties that will help you achieve your investment goals, and how to look at and analyze a neighborhood and a market that you're interested in investing in, and really understand whether it has those fundamentals in place to make it a solid investment and a investment area where you can continue to invest and see a return for the long term, that the fundamentals are in place for you to continue to make money year over year. So what do I want in return from me sharing 15 years plus of professional real estate experience with you, and how to identify these opportunities in neighborhoods? It's not a course, not selling anything. Just do me a favor and hit the like button, please. I really appreciate it. So, thank you. Now, let's get into it. So what do you want from your investment? Do you want cash flow? Do you want equity appreciation? Or are you like most of us and you want both? If you live in certain markets, it's going to be market specific. Certain markets like major cities, appreciation in equity value is really going to be a huge factor, more so than cash flow, because the price of entry is so high. Perfect example right now is New York City. People are leaving in mass exodus for the suburbs and for rural areas because they're working remotely. They don't need to be in the city. It is expensive, so people are living in cramped conditions because it's a high density area. When you got a lot of people living in one small place, they all have to live in small compartment apartments, and people don't want to live like that during a global pandemic. So prices are dropping, people are fleeing. That's a great market to buy into because it's New York City. It will rebound. Tourism will come back after the pandemic is over. But you're not going to see a lot of rental cash flow right now because not a lot of people are looking to rent in the city. There are still plenty of people renting, but there's not as many as there were, say, a year ago. So that's a great investment opportunity and a great example of somewhere where you're going to buy at a lower price now, and you're going to ride the wave post-pandemic up to equity appreciation, but you're not going to see a good cash flow. You may not see any cash flow. So in those types of markets, you're really going to have to be in a great financial position to absorb vacancies and potential capital improvement projects because your cash flow really isn't going to cover those. But if you're not in those type of markets and you're not interested in investing in those markets and you want cash flow and equity appreciation, then you need to identify the markets and neighborhoods that are going to provide those for you. Typically, in any solid investment, especially where you're looking for cash flow and equity appreciation, you're looking for an investment that is going to avoid certain risks and also have a strong upside potential. So how do you identify that? How do you get ahead of the curve so you can ride the wave of the upside to a higher equity appreciation while continuously getting cash flow in the meantime? When it comes to real estate, there are certain factors that you can use to identify those types of solid investments. You need to know your market. So ask yourself the following questions that drive the decisions of basically every single renter. When you're looking at your target neighborhood and area, ask yourself, where are the people who live here employed? Is there a major employer in this local area, or is there an industry that employs most of the people in this area? If that major employer relocated, would the people who live there and are going to rent from you stay as well, or would they relocate? If the industry that employs most of the people in that area suffers dramatically due to market economics and a downturn in the market, are the people who suddenly find themselves out of a job going to stay there, or are they going to move somewhere else for another opportunity? There has to be more than just their job holding them to that market, preferably. Another major question to ask yourself is, if there are many employers in the area and many opportunities in the area, how are people getting to those jobs? Are they driving? Is there a great public transportation system? If so, how close are you and your investment property to that highway entrance or the next station terminal where the public transportation is available? Because at the end of the day, that is a big factor for people. They don't want a long commute to their commute. They want to be able to jump on the highway or jump on the train or the bus and get to the job or place they need to be. They can sleep later and be home earlier. That will drive people's decisions to rent with you versus a property 4 blocks away. Remember, not everyone can work remotely. Are the schools good? Or is the school district slightly better in the neighboring town? That's something you have to consider, because when the schools are better, that means the prices are higher, which means the taxes are higher, which means you have to ask for higher rents. So if the school district is one of the major factors for why you're buying in that target market and neighborhood, then you have to realize you shouldn't be buying 1-bedroom apartments. You should be buying a property with room for families. Are the majority of renters in your target area young families, maybe young professionals right out of college? Maybe it's a college town. Maybe it's an area full of retirees who are moving to that target market for location value, like golf courses and pretty beaches, more so than they are moving there for employment opportunities. That's something that's very important to understand, because it will dictate the type of property you buy within that market. I typically look at the 2000 census data and compare it to the 2010 census data, and then I go and walk the area. I go to the supermarket because everybody who lives in the neighborhood has to go to the supermarket. I go there during the week. I go there on a Saturday. I go there on a Sunday. Just get familiar with the neighborhood. Go to a local coffee shop on a main avenue, have a cup of coffee, sit in a window seat, and watch who walks by. And that'll give you an idea of whether or not the neighborhood has changed since the 2010 data, which is already 10 years old. And FYI, there's a 2020 census that is going on right now. If you haven't participated in the 2020 census, and we're all home right now and all on the computer right now, and you can do it in 5 minutes on the computer, do it. It is important. Fill out your 2020 census. That's my whole PSA. Answering these basic questions is going to give you a general understanding of whether or not this is a great market to buy in that has the solid fundamentals for a long-term investment. And answering those questions that we just reviewed is also going to tell you what type of property you need to buy. Are people going to be looking for 2-bedroom, 1-bath because their kids right out of college? Or are they going to be families who are looking for 3-bedroom, 2-bathroom? Are they going to expect in-unit laundry, or is a laundromat down the block going to be sufficient? Are people going to be looking for parking? Is that critical to have on-site parking on your property? Or are people going to be using mass transit and public transportation primarily to get back and forth from wherever they need to be? These are the things that understanding your market will dictate to you, so you can then go identify the right property to buy in that market. The next question is whether or not you're buying at the right price. That's a video for another day. So click like on this one and click subscribe and hit the notification bell, because we are going to cover how to do sales comps, after repair value comps, and rental comps, so you know what you should be spending to buy a property, to renovate a property, and what you should expect to receive back in rents, both on the property when you buy it and after you fully repaired it. Because if people are already living there, you can't repair it while they're living there. It's very difficult. You're going to repair it after they vacate, and then you're going to raise the rents as long as you're able to. So click like, click subscribe. Look forward to that video. It's coming, I think, this week, if not next week. And we also have other videos that have touched on that topic that we've previously posted. So look through the catalog of videos on our homepage and check out some of those. Remember, it is about gaining the confidence and continually educating yourself so that you do the right deal and not the rush deal. See you next time.